starting it up, how was the core or the foundation for that setup, right? Because I assume, you know, it's pretty complex, especially with a construction company, to get that set up to work efficiently out of state.
Yeah, I mean, honestly, man, there's a lot of people who call themselves a contractor and they're just fly-by-night painters. Like, they're literally, like, they can say they're a general contractor all day, but when it comes to tiling a bathroom even, or when it comes to purchasing materials, they don't know where to go. They're not looking out for your best interests. You can honestly tell a lot by a bid they give you. Like, if you ask someone to go bid you on a deal, even if you don't have the property under contract, contractors never know whether it's under contract or who owns it. You just say, hey, you know, here's the code to my house. Can you go look through it and give me a bid? You should look out for people, who are looking out for your best interests. People who have worked for investors before, because if they've worked for investors before, they kind of know the game. They
find it though. Like, if I were going to get an out-of-state house, I mean, do I go there and look at houses that just came on the market, call up the owners and say, who did you use?
No, what I definitely, if you're looking at finding, if you told me right now I had to go like somewhere I don't know, like Phoenix, and I have to find a contractor, not only would I'd go to bigger pockets and not ask, hey, are there any contractors? I would say, hey, what investors, you know, would be open to give me some referrals for this type of work in Phoenix? You know, like, I mean, in the beginning, you didn't like think about this stuff, like, do they clean up after themselves? Do they show up on time? There are guys, like, I love working with this guy down in Akron because he's like a lone wolf. I just call him a lone wolf because it's just like him and his 2 kids, right? Like, he's like 42. I never had to manage him. He showed up 7:30 a.m., you know, not managed very heavily. And some of the guys are just self-managed and they want to run through the project, make their money, and go on to the next thing. So making sure that guys are on time and clean up after themselves. They're not smoking cigarettes like right on the street. Like, most of my guys smoke for whatever reason. And, you know, just being respectful of the neighborhood, not being loud. And there's a lot of different things that I've ran into where, you know, guys can just maybe either annoy the neighbors or, you know, cut lumber out in the front yard where, you know, it's too nice of a neighborhood to be doing that. You just kind of have to know the neighborhood a little bit, but yeah, on your first one, I would say, yeah, starting small is so key, and especially if you're using other people's money, where it's just you kind of finding the deal that makes things a little less risky. So,
I mean, the question was how to vet the contractors, right? Mm-hmm. So, I mean, obviously you're going to want to look at references, like, what have you done recently? Can you like show me 3 projects you've done in the last 3 months, or you've been eating on, like, sitting on the couch eating potato chips? You know, so look at what they've been doing recently. They're doing a lot of projects, looking at the quality of those projects, and talking to the people that hired them and seeing how their experience was, right? So that'd probably be like, you know, where you can really get a good understanding of the quality of the guys. And stuff like that where they're talking about, like, maybe look at their truck. Is it like an old beat up piece of crap with like a missing wheel, or like is it a nicer newer truck? You know, they're keeping it clean, or they have like opened the door and beer cans fall out. You can get a good judge like the guy's character by things like if he's showing up on time, if they're smoking cigarettes and throwing them out, you know, all over the house or whatever. You know, those are all things that could be kind of red flags. So judging the character of the person too is, you know, pretty key. But probably those two would be the biggest points to get.
All my guys have new trucks.
I mean, I haven't done this yet, but I know that often here agents have skin in the game in these investments. So often, if it's an out-of-state investor in California, a lot of my teammates actually go and check on the properties because, you know, they bought the property for them and they want to sell it too, and they want to continue doing that. So you do have a resource in your agent, and they're going to make sure that you know, they're probably going to know people in the neighborhood too. And they're going to know, you know, what goes in the neighborhood. So, you know, you can do it on your own again, but I do recommend it.
So doing like what Antoine was talking about, looking at like how you can pull up on Zillow and see like Judy and Jane have 60 sales in the last 3 months. So they're obviously very active and they're killing it. Yeah. And if they're a KW agent, you know, Tommy can do a search and hook you up with active agents in that area. But those agents can be a big resource for you. Like if it's a contractor that's been working with the agent for 5 years, odds are they're probably not going to screw you over. So that's a good point.
Yeah, and if you can approach an agent and say, hey, I want to buy properties in this zip code and I want to fix them up and do 3-month projects, and, you know, they're just seeing dollar signs, and then
That's-
because that's the other thing. If you have the agent involved in the deal, they're going to do just right amount of work to get the deal to sell for the highest price. Right?
Yeah, and then there's one of them that's a real hustler.
Yeah.
So you don't know who that is, unless usually you get the listing broker and then there's agents underneath it. So, it's always good to give somebody a chance because then you have an agent for life.
Yeah.
Yeah. Any other questions?
Actually, so I kind of wanted to go back to picking them up. I know that, in your case, you kind of grew up in that area, but let's say that you brand new, you're looking for an out-of-state market. How much research, I guess in your case, have you done? Can you kind of give us some pointers in terms of, and also for you know Orlando, you have your partner there, so can you kind of elaborate a little, like just kind of going back to the basics?
Yeah.
How do you pick a out-of-state market?
Yeah, so there's a couple different things. First of all, you want to see the job growth, the population growth, you want to look at major employers, you want to look at the different industries, the diversity of industries. So you don't want what happened in Detroit to happen in your market, right? So
you're better off maybe going in the Midwest.
Antoine's in 4 different cities heavily. And so I think the main thing you do have to ask yourself is like, what are your goals? Because like if you're looking to buy like a 20-unit apartment, that's something like he mentioned where the job growth in the city could be cut if this auto manufacturer leaves town or the government does something. You don't want to be at that. But if you're buying duplexes in an area that's trendy and there's a college right there, it might not matter. So it depends what your goals are. If you want to get like turnkey investments where like you're looking to buy a rental property and cash out refi and like break even and have like a nice like $400, $500 a month, looking at cities where those numbers are really good, like he does stuff in Birmingham, which like I've looked at and like, damn, $500, $600 a month on something that like, you only have to hold for 6 months and pull your money out, like damn, you get like 10 of those and you can retire. So really looking at those type of numbers and asking yourself what your goals are. Like I would never go anywhere but Cleveland to flip, but I would absolutely partner with him and do, I would buy stuff in Memphis or St. Louis or something if the numbers made sense. So, understanding that. And at least with Cleveland, I'll tell you this, like the 2 major hospital systems, University Hospitals and Cleveland Clinic, completely control the city. They have more power than the mayor, they have more power than LeBron. They absolutely do. They have 1/3 of like the entire city of like 500,000 people are employed in some way, shape, or form through the major hospital system. It's because, like it or not, the pharmaceutical industry has a lot of control. If you drive through Cleveland, almost every major freeway exit, emergency room, old hospital has been bought out by Cleveland Clinic or UH and been rebranded, and like every freaking just everywhere you look.
you want the rents to be $1,000 per month, which is the 1% rule. That property is going to cash flow nicely. But if you go in like a market like Nashville or Austin, the average price of the home is like $250, $300, and the rents are like $1,800 a month, right? So it's not a cash flowing market. You want to find markets where the median household is close to $100,000 and the rents are close to $1,000 as well.
And the other thing I'm kind of going off of that with the cash flow versus flipping, I guess, or one way a lot of people look at it is, like Midwest markets, Cleveland, Indiana, whatever, where these houses are a lot cheaper, and you can be all into a rental property for $60,000. Your cash flow is great. Those don't tend to appreciate as much as the higher end markets like Los Angeles, San Diego, San Francisco, Austin, Texas is on fire.
Appreciation happening. It's just fairy dust. But cash flow is something you can collect, every single month.
Right. Thank you.
Yeah. But definitely, so that's definitely kind of in line the appreciation question. Like a 4-unit in LA, same deal. It's gonna, again, you can't bank on appreciation, but the same way that the single family homes might appreciate in those given markets, like you might have bought a 30-unit in Cleveland, in the hood 30 years ago, it might still be worth the same. So I'm not like ripping on Cleveland. It's the example I use. But so it does, they kind of do go, hand in hand, multifamily, single family.
But bottom line is that, like, apartment buildings, cash flow is king.
Oh, multifamily.
Oh, God.
Even in cities, if you have like, even if it's whatever, 15, 20-unit building, there's a lot of money from Canada, Asia. Like there's like stupid investors out there, there are stupid investors from everywhere that are inflating the market, okay? So like when you have that combined with maybe some overseas money, especially what you see in LA, and then that's combined with like, you know, a hot market, then you're gonna just get inflated prices, and people are paying whatever for apartments in Cleveland. And we were talking about this before. I was on a podcast last week, and you said LoopNet, the majority of apartments on there are just owners of like landlords, and they'll just put it on LoopNet and say, we'll see if I can get 1.2.
Yep.
I probably won't, but you know, those deals, you're a commercial broker, those deals aren't deals anymore because they're on the MLS. I would say that the best way to find a deal like that, I don't know if you've done anything like this, but like just writing letters directly to owners. Hi, I'm an investor, you know, I know you own this building here, even if you're not interested in selling, can we meet up to, you know, for a call or a cup of coffee or something? And then you get to understand their thinking, if they own any other properties that maybe aren't like hitting their numbers as well, or aren't occupied, or maybe need some rehab and this person doesn't have the money, or they're getting divorced. There's so many different things that some of these landlords could be going through. And just by directly calling the owners or doing some research, who owns this LLC, calling here's the big thing. Multifamily in a place like Cleveland or St. Louis or whatever, you're not gonna appreciate, you gotta buy it. Buy it at a really, really good price. Like really do your research, get ready to like offer on a bunch of different stuff until you get a really, really good deal on a solid property. Get something underpriced, and then do a solid job on the rehab, and then your property's gonna be worth a lot.
Right, so I'm forcing appreciation. It doesn't matter what the hell's happening around my property. Even if a Starbucks open up across the street, it may bring my cap from an 8 to a 7, which may increase the value, right? But you want to go in and force, that's why it's important with apartment buildings to do forced appreciation as fast as you can. Now you have multiple exit strategies. You can sell it, you can hold it forever, do a refinance. There's a million different options if you're forcing the appreciation.
Right.
So I'm getting ready to do an exchange of my portfolio in Ohio, and I've come across motivated sellers with more esoteric type of cash flow investments like assisted living deals, mobile home park. I mean, I know you guys primarily just focus on apartment buildings, but what's your sentiment on, like, let's say assisted living or mobile home park?
So like, what do I think about?
Yeah, why residential, like single-family homes and multi-family homes versus everybody's talking about trailer parks, getting into the mobile homes, and why not those things? Yeah,
I think for me, just because single family's what I've been doing for, since I started, and have found ways to kind of systemize and scale single family. So I want to continue doing that. I mean, that's pretty much it for me. And I think just kind of as a side thought, people are looking at a lot of those alternative things in markets like LA and stuff where you can't find a good deal on a single family home, right? So people are like, I need to buy a mobile home park or do an assisted living thing or whatever. Conversation probably is brought up a lot more frequently here where there's so much competition where you can't find something in a normal kind of asset class to where you're exploring other things. Whereas, like, I'm in Denver, which is a pretty fast growing market. It's really hot, it's really competitive. But I mean, we're still focused on our bread and butter. But I mean, yeah, I think that those things get brought up a lot more in markets where there's a lot of competition. But personally, just because I don't want to focus on 10 different things, a self-storage business is a lot different to run than a single-family flip. Senior housing facility is a lot different to run than it's a duplex. Those are real businesses. You're taking care of old people, hiring nurses. That's a real. It's not a real estate deal at that point. You're doing a real estate deal and simultaneously doing a just totally unrelated business. So.
There are people that specialize in it, like the assisted living thing. You talk about value add. There's turnover, so there'll be a vacancy, and it's easy to kind of upgrade it. And there's ways to go in there. A lot of people just get fatigued of running that business, so you're able to get in and out pretty easily. But like they say, there's a lot of moving parts with that. And mobile homes, you have to kind of buy on a larger scale, to get that. The overhead is very, very low. You don't have to do a lot of maintenance in your management. It's going to be very, very inexpensive. But again, there's a lot of moving parts, and there's a lot of evictions, and there's a lot of things that go on there. But all their upsides. But yeah,
I mean, I'd like to talk a little bit about assisted living. I've been pumped about it. They're not treated right. They get called at 3 in the morning for stupid things, and they come to these facilities, and it's like, oh, I could have a better work environment with the same pay and only manage 5 residents. Why would I not work at that company where before I was managing 180 people and I was cleaning up, stuff all day? It's tough to really look at that, but these nurses are absolutely looking at quality of life just as much as the residents are. So it's super attractive to me. I've definitely looked at it. Yeah, like think about it. If you have a house, a 4-bed, 3-bath house, real quick, reconvert it into an assisted living facility with 8 beds and 4 baths, and you can charge $3,200 a month times 8, and the operator's coming in and you're paying them $12,000, you're still making like a ridiculous profit.
Wow.
But it might take 6 to 12 months of permitting. You might have to deal with all your holding costs, and you're not sure if the city or the Ohio Department of Mental Health comes in and inspects and says you have to do this. And this is coming from almost, still I think I have no knowledge of it, but like wrapping your head around the process of it, and partnering with the right like people who can run a mobile home park or something, you know. Yeah.
So if you want to do senior house,
There's a lot of old people and they're all going to shitty assisted living facilities. I'll tell you that right now. It's huh? Is it? Yeah. Yeah. Just, you know. So anyways, let's
One of the questions jumped out here though. Like earlier you were talking about how when you started out, you know, you're a lawyer and you had a W-2 and, you know, but how would somebody that's starting out, let's say they're doing a redirected IRA or something, how would you mitigate the risk or hedge yourself against, you know, what's the easiest way to do it? You know, what's...
easiest way to make sure that you don't get burned, buy a property that was built after 1960, the building codes are better, buy a property in an area that you know and trust, partner with another investor for all, I would honestly, like, someone like Antoine, like somebody who's actively doing business somewhere, go to them and say, what can I do for you? What can I do for you? I'll fly to the city every few weeks and overview the project. I'll talk to people. I'll make sure the windows are installed correctly. I'll make sure that we're not going over budget. Like literally to be like an intern with like wide eyes and just be like, what can I do for you? I'll barely take, you know, maybe like 25, 35% of a project. If someone came to me and said, hey, I'd like to manage like a couple years ago and offered that to me, I would absolutely seriously think about giving them equity in a project because that would take a lot of stress and headache off my hand. So buying a property with very little rehab in a market where maybe someone you know, like, and trust is actively doing deals, it's kind of cool to be able to be like, hey, it's part of work to like fly in a plane, you know, usually there's spirit red eyes for me, but to go to a city and actually like manage people, it's a people game. That's what real estate is, managing people. That's half the battle. So
yeah, I would buy something with that you can get conventional financing up front. Now you have the banks on your team, right? So in my price point, I sell all my properties for $70,000, $80,000, $90,000. So I buy them for $30,000, $40,000, renovate them for $30,000, $40,000, right? But hard money doesn't really lend in my space, so I can't go and really get a hard money loan because they have points minimums. And those points minimums are $2,500 and they take a whole lot of time, right? So if you buy a property that doesn't need that much work and you can get a Fannie Mae loan on that and use your W-2 income, and let's say that property needs a new HVAC or a new hot water tank, the bank's still going to fund 80% of your project. You put 20% down, you take the 10 grand off your credit card or out of your pocket, and now you can do your first flip. And yeah, you're going to test all the different pieces of the puzzle, right? So your contractor, the lender, and then your boots on the ground who's going to manage that project. But you have the bank on your team. The worst case is you can rent the property out, make cash flow. You can put it back on the market after a couple months if things don't go well. But at least you have somebody who's funding 80% of your project at a low interest rate. Now, hard money, which he uses hard money all the time. How much do you pay? It's 12%?
12% interest only. So you buy a house, $200,000, $50,000 rehab. They'll fund 100% of the rehab and like 89% of the purchase. But you know, 12%.
But it's double the interest rate. Where Fannie Mae's lending at 5.6% now.
And they're short-term loans. So I have a property right now. I had a disagreement with a business partner. I had to kick him out of there. And now I have a property with a tenant in it, and I have short-term financing, so I have to kick the tenant out and convince her to move. She's a great tenant. I'll find her a place eventually. But now, you know, I had to pay an extension fee, which is 1 month, so a $1,400 extension fee. And it really only got me another 3 months. So hard money has its restrictions. 12-month line. I mean, anything could go wrong. The weather could be really bad. You know, you could have a personal issue, and you don't want 12 months to do a project. Ideally, you want a 30-year. I mean, I bought a house in 2014 for 50 grand in Cleveland, and I put down 20% through First Federal Lakewood. It was the easiest thing in the world. Down closing was like what, $12,000, $15,000.
Do you recommend an LLC?
So LLCs, if you're doing a rehab project, like a heavy rehab project, without conventional financing, then I would set up an LLC. If you're gonna get a hard money loan, set up an LLC. If you're gonna do private money and raise the whole project without any other conventional funding, then yeah, set up an LLC. And right now we're setting up LLCs in Wyoming. We use a website called Incorp, incorp.com. It's like a third of the price of LegalZoom, and we're setting them all up in Wyoming.
Why is that? I'm curious.
So why Wyoming? It's cheaper. It's the cheapest one right now. And it's also a non-piercing state, which means that if, for example, you're doing a rehab project, some of the guys sue you for whatever, then they sue the LLC because the LLC is the owner of that property, correct? But what non-piercing means is that even if you're sued, your personal assets cannot be pierced.
Yeah.
Whereas if you create an LLC in California, which is what a lot of people do, then they go buy a property out of state, and now all their personal assets are open to be sued because they don't have any non-piercing laws. And it's also like 10 times the price to make an LLC here than in Wyoming.
Do you set up a different LLC for each property?
So what I do is I set up a banner LLC, so Martel Turnkey, whatever, and then underneath that I have MTK1, MTK2, MTKH, and all of those LLCs are owned by the banner. It just helps with taxes because I just submit one tax return for Martel Turnkey, and then all the other ones below it are pass through. They pretty much say they're owned by the banner.
Are you paying an $800 fee on each one of
So
those?
you pay it one time.
You pay it one time?
Because the banner is owned by me, right? But all the other subsidiaries, and what he's talking about is the California tax to have an LLC. It's $800 for every LLC, but you get to bypass that by setting up that banner, and then all the 40 LLCs you have below it are owned by one. So you pay $800 one time instead of 40 grand a year.
Is that just essentially a series LLC or another, would you describe a series LLC? Or?
I'm not sure what series LLC is.
Where it's just like one LLC with different like sub LLCs.
That's what he's saying, yeah.
Yeah. Here's one side note. I am in a legal dispute with a former partner right now, and every single title company is coming to me, and every single time I'm focusing on transferring title of the property, since that person's name is on the incorporation document. I'm very, as an attorney, obviously, I want to make sure I do things the right way. Every single title company's underwriter has come back to me and said, where's your operating agreement? So when you file for an LLC, if you don't have an operating agreement, that can cause a lot of problems for you. So when you do that, you can easily, Northwest Register Agent or your website that you mentioned, it has stock forms on there to create an operating agreement, and it's very much just like, how is this company going to be managed? It's like even big companies like Amazon from day one eventually had to have operating procedures, and how often are we going to meet, and how do we fire someone from the company, and how do we hold a meeting, and who has invested capital into the company, and what are the shares, and how do we vote, and all this stuff.
Yeah.
That's important to underwriters, because if they can't see that you have a document how you govern yourself, then that's going to be an issue when it comes to sell. And they're like, well, what about Jeff Jefferson? Where is he at? And, well, I haven't heard from him in months, but he's on this document. So, being careful how you set that up and making sure it's a little bit flexible is always pretty key.
Yeah, that brings up another point too, is if you have all those, like if MTK3 is doing a joint venture deal with Jared, and we have a joint venture agreement with my MTK3 LLC and his company, then it's just those two companies are doing a deal. But my main banner LLC, which owns all the other LLCs, is not involved. So if shit hits the fan, then just one LLC is under fire, right? But all the other LLCs are separate entities. So it would make that process a whole lot easier too.
Something on the kind of token of what he was talking about, piercing states and non-piercing states. So the operating agreement is pretty important in those kind of like piercing states, probably in non-piercing states also, just because what piercing means essentially is piercing the corporate veil. So being able for, like a judge to say, hey, this LLC is like, yeah, it's an LLC, but it's really just you like buying one house. So if you have an operating agreement in place, and that's one thing that they look at in the case where you're getting sued for something, whatever it may be. If you don't have any operating agreement in place, if you're paying for materials on your personal credit card, this kind of stuff, and really not, there's the lines blurred between business and personal. It's very easy for them to say like, hey, this is just you. We're coming after your personal assets. LLC is just whatever, an LLC. But having an operating agreement in place, things like that will help to kind of prevent you from getting pierced.
You call an operating agreement the same thing as I'd call a business plan then?
No, an operating agreement is different. Business plan is, like, hey, this is the premise what we're gonna do. An operating agreement will have things, like you were saying, like membership interests, voting rights, what happens if someone gets hit by a truck, like, just everything kind of, how the business is managed and run.
Yeah, and it's a document that a court or an underwriter would look to as to who has authority. The big thing for most things, and the big thing for me right now, is who has the authority to transfer title, who has the authority to sign a deed and sell the property. And if you have a business partner who's disagreeing with you, no, I want to keep this as a rental property, and then you go under contract and the title company says, okay, well, time to close. Where's Jeff Jefferson? He's gone.
Thank you. Jocelyn, how many offers you placed to get one deal? 30? 20? 21. So she places 20 offers here to flip in LA. We've placed 3 or 4 offers to get one house. So, and that's just on the MLS. Wholesalers are great if you find a good one and can give them an incentive to give you the deal first, like closing fast, paying them whatever the hell they want, and as long as the numbers work for you, then they're going to keep funneling deals to you. I even partnered up with my wholesaler now, where I have a cold call company calling homeowners and passing leads off to the wholesaler so that the wholesaler can bring me more deals, right? So MLS wholesalers, other investors, realtors are a great one too, cold calling realtors, flying out there and shaking hands and having lunch with realtors too, showing them that you're real.
I do all off market,
Yeah.
a couple MLS, but it really depends on what you're looking to do. Like in your case, I know you're kind of wheeling and dealing and you're looking for deals, so off market makes sense. For the person that's looking to buy 1, 2, 3, 4, just a few properties, then maybe just hooking up with a realtor will be easier. It's not really worthwhile setting up a year-long direct mail campaign to buy a couple properties. So if you're looking to do a ton of volume, MLS is great, but off-market is a good way to supplement that as well. But if you're looking for just your first property and you want to buy 1 a year, then a real estate agent can do a lot of the kind of grunt work for you. So call Tommy at KW.
I get off markets too.
But how do you get all of your deals off market?
Well, there's a new, because I'm a realtor in KW also, KW is a technology firm first. I mentioned that earlier. And then there's real estate second. They pour a lot of money, a lot of their profits into the technology. And one of the things they've worked with the National Association of Realtors to come up with a platform that pulls all the data. It pulls all the titles, it pulls demographics, it pulls all that stuff into one place. But it also gets the nitty gritty, which are the distressed properties and anything that goes into probate, etc. That's relatively new thing that they've come up with, and they just rolled it out in the last 2 or 3 weeks. Also, I do cold calls. Often I'm in contact with people in my office that get things that just don't have time. Like they have a client that I get referrals from residential people that are like, this family needs to move to Spain and I don't have time to deal with this. Do you have anybody?
Yeah.
And I'll throw it up in call people. I've been doing that. Usually I pass it to another agent because I'm focused somewhere else. But
yeah, not a KW commercial, but agents are really like a good resource, whether it's finding contractors, finding deals, finding lenders. Like the agents, especially if they're doing volume and they work with investors, they could be a great resource. And I do the same thing, like I cold call, and I came from wholesaling virtually and doing all the pay-per-click and cold calling, direct mail, and have really been just kind of deep in the off-market acquisition stuff for a number of years now, and cold calling is kind of the bread and butter for us. We're just cold calling distress lists first, and just calling homeowner lists. We've got kind of like a call center operation set up where we're just doing a ton of dials every day and talking to homeowners. So.
Because one deal for him doing something like that could be a really huge home run.
Right.
And it's worth, the monthly ad spend or whatever you want to call it to do that. I've never done it. I would love to start talking about doing it because it's just like, dude, if you're operating behind the screen that is the MLS, then you have stuff that no other investor has. It's like your ability to connect with people that need to get rid of their stuff. Mm-hmm. So.
Yeah, it's definitely like the greatest deals are to be had off market, of course, because like you put something on the MLS, then every investor in that market can see it. Off market, you might be, chances are you're probably not the only investor talking to them, but you might be one of the few, and you have a much better shot at getting something at a deep discount.
No realtor commission.
No realtor commissions for the seller. Quick cash close. you know, so off-market can be good if you're looking to do more volume.
So how do you find these distressed properties, right? Or the lists for them? You know, like how do you know like what owner to contact?
Call me.
Well, I think these guys will for sure be able to answer like list questions, but for me in a city like Cleveland, go on Facebook and find like the top 3, St. Louis real estate investor group. You go on there, and there are wholesalers that are posting deals constantly, and you give them your email address, and after a while, you're gonna get to see who the best like wholesalers are. Some of the wholesalers have 2 or 3 guys that drive for dollars, so they're driving around the neighborhoods. House has a wheelchair ramp and weeds and all sorts of crap falling apart. They write down the address, they get the number, they call. So they have operations already set up to find deals for you. So that's, Antoine probably gets a lot of deals from wholesalers because they're out there doing the hard work, and that kind of validates getting 10 or 12 or 5 or 10 grand sometimes for a guy to go out and just drive for dollars all day. And so finding the wholesalers that are going out there and doing it the right way and not marking things up ridiculous numbers, or ones that are actually giving you steady, like conservative comps, going straight into groups, find out who's finding deals there, basically. That's what I would do if I wasn't calling, but these guys would.
Especially if you're like full-time job, you live in LA and you're looking to get your first couple of deals in a different market, you're not gonna have like all the time to invest. Like, people say go drive around or call foreclosure, it's so easy, but like you have to put in so much time to find deals off market, and it's like a really skill you have to learn and develop. So using wholesalers and using realtors, those are kind of like marketing people. If you're a real estate investor, call a realtor and invest in real estate. If you're trying to learn how to be a great marketer and find distressed stuff yourself and do it at scale, then other things you may look into, lists, yada yada yada. But to answer your question, though, like a lot of the stuff comes from the county. There are tons of list providers out there, whether it's like ListSource, Rebo Gateway, whatever, that compile the data and make it much easier for you to access. But really depends on what you're trying to do. If you're looking for one or a couple deals, wholesalers and realtors, like that's it. If you want to be buying 100 deals a year, then learn how to market, list, et cetera, et cetera.
Touch on it again too, other investors. Other investors are so busy. I mean, I have deals all the time I can't take down. I know for sure this guy does. So like, when you get to the point where you are getting so much deal flow in, the best investors are going to cherry pick the best ones, and there's still good ones to be had, but other investors who are doing volume, especially ones who are buying a lot of rental properties or in the turnkey game or something, they're going to be able to know about like other addresses, like, oh, this is probably a good deal, I just haven't even had time to look at it, sort of thing. So yeah, other investors can be good.
One last question, anybody? Sir?
How can I incentivize investors like you to give me deals?
To be honestly, like in an area like LA, it's very, I was telling you, like on the podcast, we talked about this, it's very inclusive in LA. You go out and hawk deals, everyone's like, oh, this is my deal, this is my neighborhood, this is my area. But like in a place like Cleveland, I mean, people are pretty like open, and especially because there's more deals to be had. It's not that much of a threat for you to come and ask me, hey, do you have any deals? Say your question again, because I just want to answer.
Do you have any creative ways for me to incentivize or to add value to another investor so that I can get deals from them, or maybe go partner with them?
As an investor?
As an investor.
Yeah, I mean, it really depends on that other person's resources and what resources you can do to match. So, for example, if I had a deal that I couldn't take down, what can you provide to me? Can you give me? We'll use my crew, but you need to manage the whole project. You need to fly out there and be there for 2 months. Or what thing do I obviously don't have enough something to do that deal. What can you provide to fill that something so that we can do a deal together? And maybe we split the profit 50-50 because we're using my team and I found the deal, but you just raise the money. Or there's a million different ways to cut the pie. And that's why it's always good, again, to go back to the legal side, always having those different LLCs, because you can split a deal 50-50, and if it goes south, well.
And that's a good idea too, because often these guys are so crazy busy. If you do your diligence, it's just like what any of us do. The more you do before you talk to people and you can fill a void for them, the better off you'll be.
Yeah, I mean, think about it, man. Like, people like, we might be busy. Your time is a huge asset. The fact that you have time, or if that you could go out and say, hey, I can fly out once a month and manage this project. I can call the realtor and talk to them and make sure that houses are selling at a certain price point. Like, your time is a big asset. It's very much like if you're willing to take a piece of the pie at like a little bit of reduction, or if you're willing to do a little bit more work than somebody else, like that'll work you in easily.
Hey everybody, I'm Antoine Martel. Had a good time speaking today on the panel about real estate investing in Cleveland, Memphis, Birmingham, St. Louis. See you at the next one.